Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
Jim, today we're going to finish the final 5 favorites from our 2025 favorites collection, and that will set the stage for attending the Metals Investor Forum conference this weekend.
Is your new Kaiser Watch Substack ready for your 2025 KRO favorites?
Well, I've been so bogged down getting all of these favorites properly written up and explained that no, I have not got that quite ready. The Kaiser Watch Substack does exist. It'll be next week when I'm back from this trip to Vancouver that I will finally have everything set up. The plan is to flow all of these first 3 parts of the Kaiser Watch as free items posted to the Kaiser Watch General portion, and then set up a subscriber-only system, $10 a month, where in future Kaiser Watch episodes, we'll kick it off with a general description of what's going on in general, and then we'll address any of the favorites and maybe some from my bottom fish collection, which have had something interesting happen that way, and that'll be available free through the YouTube. You can listen to it, but those will be posted under the Kaiser Watch specific part of the Kaiser Substack. Now, 4 of today's 5 favorites that we're going to talk about are actually part of my Metals Investor Forum session. It's taking place on the 17th and 18th at the Fairmont Pacific in Vancouver. That's right across from the big convention center where the VRIC conference will take place on Sunday, Monday, where I'll also be walking the floor, visiting companies that I'm familiar with and maybe even some that I'm not familiar with. But the trick with the Metals Investor Forum is that it is free, but you need to register in advance. Go to my homepage. You'll find a link to the site and click on it and make sure that you're on their list so that when you go there, you can get in. My session is on Friday, starting at 4:20, hopefully ending at 5:30, because that's when the bar opens up and everybody wants to leave. The 5 companies in my session: P2 Gold, which we talked about last week; PJX Resources Inc., which we also talked about last week; Solitario Resources Corp., which we'll talk about this week; Vista Gold Corp., also this week; and VR Resources, which we'll talk about today. All 5 of these companies will be doing their 12-minute presentation, and I will earlier in the morning be recording a Q&A with each one where we can go into greater details about some of the nuances of their story. I'm very pleased with this group of companies that has agreed to be part of my session, and I think all 5 of them will surprise everybody by this time next year.
Why do you think Solitario Resources Corp would be the star of the KRO 2025 favorites collection?
Well, I've had it several years now in the favorites collection, and it's had its moments where it's up 50% or so, but nothing special so far. But they are finally in a position where they have started drilling. They picked up the Golden Crest project in 2021. It is in the western part of the Black Hills in South Dakota, pretty much sort of southwest of the historic mining district, where the wharf system has had 10 million low-grade ounces and 3 million high-grade ounces extracted from it. And, of course, the Homestake deposit itself, which is a basement Precambrian age iron formation deposit from which 68 million high-grade ounces have been mined. And then there's others in the area, such as Gilt Edge and even old paleoplacer deposits that were shed from the original outcropping of a Homestake mine way back in the billion years between the formation of it and when all those sediments started to be laid down in that area to create a big layer cake, which 50 million years ago in the tertiary period, that's when there was another huge wave of mineralizing fluids that came through that created the wharf system, as well as the Gilt Edge system, which is actually basement hosted, and a number of other deposits in the north. So this has been like a 90 million ounce district, and when Chris Harold of of Solitario picked up the Golden Crest and started doing some sampling. He was absolutely amazed that this 33,000 acre, 13,400 hectare land package, almost the same size as the entire Homestake Wharf District, was sitting here, had a fraction of the prospector pits compared to the northern part of the Black Hills that they could see from the LiDAR images, and had no evidence of any drill holes except 3 supposedly that Homestake drilled in the 80s or 90s. They were just scout hills. They didn't find any gold in the basement, and they never did any follow-up work on this project. But in the 4 past years, they have done extensive surface sampling, which is pretty much what they've been limited to, because in 2022, they applied for a drill permit, and they did not get it from the U.S. Forest Service until early 2024. And part of the reason was there was a big distraction in the southern part of the Black Hills, where somebody wanted to drill near some reservoir where everybody has cottages and likes to go, and that distracted the U.S. Forest Service attention. So it wasn't until 2024 that they got it, and they started drilling in July of this year. This is in the Golden Crest plan of operations. They filed for their drill platforms when they had fairly early in the game, where they'd done some limited sampling over the overall property, and they managed to drill 11 holes, basically into 9 targets. They reported the downpour results, 3 holes in early September or mid-September, and these holes had good mineralization, not as good as what was trenched at or channel sampled at surface, maybe about 1/5 of the grade, but it was Mission Canyon Formation rock that hosted this. They drilled those 3 holes. They've knocked off a number of the others. There are still 3 holes pending from 3 platforms, and we'll have to see if there was anything interesting in them. Judging from the body language of Chris Harold, I don't think they're expecting any barn burner discovery holes. And but in the last batch that they released early December, this was a true discovery news release, and we talked about it in a past episode about how unusual the language was of Chris Harold signaling the importance of this hole. And the market didn't really think it was that important, because it was hole 8 yielded 19.4 meters of 1.67 gram per ton gold, which bottomed in 1.98 meters of 3.4 gram per ton. But it's started at around 375, 400 meters. And that's beyond the open pit limit. So the market said, this really sucks, and really did nothing about it. But what was interesting is they had to give up on the hole where they did. Their practice has been to drill through the entire layer cake into the Precambrian basement and just sort of see what sort of formations are in the basement. But they wanted to really have a record of the stratigraphic pile. And what they had in the bottom of this hole, they never made it into the basement, nor even to the bottom of what is the lower Deadwood Formation. But this lower Deadwood Formation, it is what makes the Wharf system tick. It is a horizon of calcareous sandstone that's a pretty good gold sponge, and the middle Deadwood Formation sits on top of it is a shale, which is a much tighter rock. And what made the Wharf system tick is that when the fluids came up through structures that cross-cut this layer cake, they hit the shale, and the shale suddenly tightens the crack, the structure. So the fluids travel sideways, path of least resistance, in the lower Deadwood. And what they believe they have intersected is the low-grade envelope that Coeur Mining is now mining. The high-grade structures, that was mined over 100 years ago when I think it was called the Golden Reward. It was underground mined, and it was averaged at 1 ounce per ton, and there's estimates that 3 million ounces came out of these structures within the lower Deadwood Formation. So since at surface, everything is pretty much Mission Canyon rock, which doesn't really exist in the north. The north is very different because the layer cake has been disrupted by tectonics. And in the case of the Homestake deposit itself, the basement is exposed. It's outcropping, where what might have been downstream 1.8 billion years ago. They found paleoplacer gold that was also found and mined. And the sediments have been that were layered on from about 400 million to 300 million years ago. They have been locally eroded in a very varied manner so that the stuff is exposed here and there. And this may be a reason why the Golden Crest Project area, apart from some poking away over 100 years ago, has been ignored, because there is the younger Mission Creek covering most of it. There's a different formation in the southeastern part called Lodgepole, which is very, very interesting. But most of it is this more tedious formation that's different from what hosts all the gold in the northern district. So when they picked these targets, it was based on sort of what surface values they managed to get, and there's anomalous gold all over this. But this particular target, it was called Platform I. It was the westernmost. It used to be called Land's End, and they drilled this because, based on government geophysical data and some additional work that they have themselves, they see a number of sort of north-south oriented structural zones. These would be zones of weakness, which would have been fluid paths if anything came up. So they just kind of drilled this hole with some very modest surface values, and they were absolutely delighted that when they hit the lower deadwood, the middle deadwood was like deadwood, totally dead. Boom, they get into lower deadwood, they have mineralization, and when they got the grades, they of course can't see that mineralization, because what's a reason this fantastic project sits here, available for a junior to explore 130 years after the original Homestake Russia took place, is because you can't see the gold here. Whatever is at surface, it's ended up being micron sized, so that when the old prospectors crushed and panned it, they never see any color. And this is kind of analogous to Nevada, where all the gold were the epithermal systems in the Walker Lane. That's what they started finding in 1850. That's from where Comstock emerged. But Carlin sat pretty much overlooked, because you needed to assay to see, even in the original surface material there, the low-grade surface, you needed to assay to see that gold was present. So it's possible that this part of the Black Hills was stigmatized over 100 years ago as worthless, so nobody really bothered to do anything. So they can go back and drill 3 more holes from this platform. All of these scout platforms are pretty widely spread. So, they will have to apply, and given how at the kind of rate at which the U.S. Forest Service handles even modification applications, Chris Harrell says, well, we'll drill these 3 holes. We're going to fan them out and try and see if we can find the high-grade structure that might be related to this lower deadwood mineralization. But then we'll have to apply, and it might be 2026 that we get to go back into. Now, they will be able to go back to Downpour and put some more holes into that. There, the mineralization is hosted in the Mission Canyon, which is not really expected to be a super host for substantial gold deposit, but they'll see what's there. And we have to wait to see what's in these remaining 3 holes to see if anything is in there. But the milestone, the absolutely important milestone for 2025 is, will they get U.S. Forest Service approval for the Ponderosa Plan of Operations, which was filed over a year ago? And they probably won't be drilling until late in the second quarter if they get it. So if they get it before that, that will really wake up this stock. Unless, of course, drilling when they can get in there early June and drill from Platform I at Land's End and start coming up with high-grade structures. But again, it would be like midsummer before we know, because they can't see very well. They can't see at all what gold grade it's going to run until they have assays. So this thing won't be ready for assay-driven liftoff until the middle of this year. But Ponderosa, when they got around to sampling in that area, They had a lot more time because basically they were waiting for the U.S. Forest Service to plot through the Golden Crest Plan of Operations application, and they started finding a super abundance of gold values at surface up to 3 ounce per ton. When you look at their graphic where they show the sort of markings indicating the intensity of gold values, this area really lights up in areas such as Geyser and Sleeping Beauty. And what's important about the Ponderosa application is they had time to do all this sampling. They rushed it with the Golden Crest. And of course, once you file it, you can't modify it. But in this area, where they hadn't done any sampling, that they did a lot of sampling. And when they filed the Ponderosa, the drill platform locations have been chosen so that if the third dimension starts to deliver grades and serious intervals reflecting what they're finding on surface, they can drill an awful lot of holes to start delineating what's going on before they need to file for an application. So, I think that this is the year it will be finally recognized as a major world-class discovery. And keep in mind, there is this potential, based on the widespread distribution of gold, all of it shielded from past prospecting and explorers by this layer cake of which the upper horizon is not overly prospective. The lodgepole is what's in the Ponderosa area. It seems to be a little bit more interesting, but it's what you will find when you go deeper. So this could be the mirror image of the North Black Holes District, the original Homestake Gold Rush. And when you see that Ponderosa Plan of Operations approved, that's when you better own the stock, because a lot of people will be buying it after that.
Why did Sunrise Energy Metals Limited make it as a 2025 favorite?
I made Sunrise Energy Metals Limited, which is an ASX-listed company, a bottom fish spec value rated favorite, because it appears to be reviving interest in the Syerston Scandium project in New South Wales of Australia. Now, in 2010, I became aware of scandium as an element, knew nothing about it before that, recognized that it was sort of a magic alloying ingredient for aluminum, makes it stronger and therefore lighter because you need less of it to accomplish the same sort of strength requirement as ordinary aluminum. It becomes weldable so that you don't have risk of the weld joints breaking, and it also makes the aluminum corrosion resistant. And these properties have been known about forever. The Soviets used aluminum scandium alloy in their MiG fighter jets in the 50s and 60s. They were able to do so because their Softy-Vody iron mine in Ukraine turned out to have seams that ran 100 to 120 ppm elemental scandium, and that's 5 to 6 times crustal abundance, which is 21 ppm, which is actually quite high for an element. That's why people say, oh, like rare earth, scandium is not very rare at all. The problem with scandium is it's a dispersoid. It's like an introvert. It hates other people. It strays away from itself. So you do not see high-grade concentration in the earth. Unlike, say, with lead, zinc, copper, nickel, it just does not pile up in high grades. And so the rest of the world said, well, it's a wonderful theoretical thing, but it's very expensive to get 20 to 50 ppm out of the ground. It's not worth it. And the world has done without scandium aluminum alloy, except for very obscure applications in the military and more recently in the solid oxide fuel cells that have become a new thing. But things changed about 15 years ago when in New South Wales they discovered that these laterite deposits had enriched scandium values as high as 700 ppm. And the company that I ended up covering for the past 12 years was Scandium International Mining Corp, whose Ningen project they did a DFS at in 2015 and actually got a mining lease in 2017. But Sunrise, which at that time was called Cleantech, it was busy with developing this ion exchange technology for water treatment and for stripping various metals out of solutions. And Robert Friedland liked this idea. He invested in the company in 2013, and in late 2014, he arranged for Ivanhoe Mines. This is Ivanhoe Mines number 2, which discovered the Kalua project, copper deposit in Congo, which is now in production. They had the Ivanhoe, while it was still private, had acquired this property in this area, the Syerston area, through something called Black Range Minerals. It had a low-grade nickel cobalt resource, but while they were exploring that, they discovered that there was almost like a donut around the nickel cobalt resource that was enriched with scandium. So when Friedland arranged for Cleantech to acquire this asset, he was thinking, we can do something with this scandium deposit. It is the richest in the world, and yes, it's twice as good as the Ningen deposit of Scandium International. And they actually got a definitive feasibility study done in 2016, and it was very similar to what Scandium International had come up with Ningen, except the grade was almost twice as much, or more than twice as much, similar sort of 200 ton per day scale operation, and it would produce about 49,000 kilograms of scandium oxide at a modest capex of 100 million Australian dollars. They plan to sell it at $1,500 a kilo rather than 2,000 like SCY. They did it at a 33% after-tax IRR, and the net NPV at 8% came in at Australian 273 million. So this was pretty good. And this was always a major threat to my other favorite, Scandium International, because with somebody like Friedland in charge of a major scandium deposit that's actually the best in the world, and of course, they were only going to mine 1.2 million tons over 20 years, but the total resource was about 28 million tons, so 400 ppm. So if scandium ever ended up being adopted by the aluminum alloy sector, they could scale this up in tandem with demand rising. So they could, in essence, have a monopoly if they emerged as a first mover for this sort of thing to develop become the supplier of scandium. But the problem with scandium is that because the industry has done without forever, they have developed alternative ways of getting these solutions, and it became kind of a chicken and the egg problem where the end users really didn't want to do an offtake unless they were guaranteed that the supply would actually happen. Because to do the offtake, they're on the hook when it does happen. They need to redesign their products to include scandium aluminum alloy, and they also need to retool their manufacturing process. And because there has never been a standalone scandium mine in the world, and in the case of Syerston, there was also technology risk because the ion exchange process that they adopted, proprietary, had never been done at a commercial scale. So things may not work out as expected. The Ningen project was being done with more conventional solvent extraction, but again, it would be a first-time thing. So who wants to do an offtake when you're not sure that the stuff will actually be producible at a profit to the company so that it will be delivered? And at the same time, who wants to bankroll this type of project which will double the supply to the world without offtakes in place? So this chicken and the egg problem was dealt with in two ways. SCY under George Putnam in 2018 said, okay, we're going to try to solve this. We'll procure scandium from China. We'll put together aluminum scandium alloy. We'll create these research alliances with all these potential end users and help them figure out how to use this and hopefully coax an offtake agreement out of them. But Friedland and the CEO, Sam Riegel, they said, well, this is kind of still a small potatoes thing with a lot of risk, and this offtake business seems to be a tough nut to crack. But we have this nickel cobalt resource. Yes, it's low grade, 0.75 to 0.85% nickel and 0.1 to 0.15% cobalt. However, these are key ingredients in sulfate form for the batteries that the Teslas and that are using. And Friedland's always been kind of a visionary about the future. And the reason he'd invested in clean tech was he liked this idea of these technologies that will clean up the air, clean up the water, and all this. But then he saw, well, here's a chance using our ion exchange technology to process this low-grade nickel cobalt ore and produce a nickel sulfate product and cobalt sulfate product that has a very low carbon footprint. So they went and raised and spent over $200 million on a definitive feasibility study that was finally delivered in 2018, and the stock, responded very well to this. But when the numbers came out, the market didn't like the 19.91% internal rate of return, nor did it like the fact that the NPV at 8% was 1.4 billion US versus 1.5 billion for the capex, and we all know that the capex always going to end up higher than predicted. Plus, they were using $7 nickel with a $1 premium for the nickel sulfate version, and they were using $30 cobalt. The stock tanked when that came out. They ended up doing a 10-for-1 rollback in 2021, renamed the company to Sunrise Energy Metals Limited, and ditched their TSX listing, which wasn't really doing them much good. And there was a brief rally in 2022 when cobalt surged back to $30, but cobalt's back into the $15, $16 range. And the Sunrise project, which they sort of market that this is a clean energy solution to the world's battery grade nickel cobalt needs, it is pretty much dead in the water, because in the meantime, China-backed Indonesia has ramped up its nickel supply to over 50% of the world's supply. This nickel is made with coal-powered electricity. It appears to be not done with much concern about the environment or anything like that. So it is dirty nickel. But we've also got this sea change underway now where some of these people, legislators, are even trying to figure out how to forbid companies from using ESG in any of their decision-making. So there is now this move to we don't care that anything is clean energy. And Friedland had expected the car makers to embrace clean inputs as part of selling their cars as the electric vehicles as part of the energy transition movement. Well, now with Trump coming in, he appears to want to do his best to reverse anything that might facilitate the energy transition. So there's also the question of what about the EVs? Now, the EVs that Friedland was focused on at the time were the Teslas, which were the leading cars at the time. And the Teslas, they do not have a solid-state lithium-ion battery, so they use nickel and cobalt in the cathode. And that's where Friedland was hoping that Sunrise Energy Metals could really deliver a clean product, a battery-grade product for this usage. But something has happened in the meantime. That the Chinese, they have built their own EV sales to be more than 50% of total sales. They have used the lithium phosphate iron battery to make cheaper EVs, which are good enough for the Chinese market. That might even be good enough, if cheap enough, in North America. But these are being blocked by the Western countries to protect the car industries, whose EVs continue to be the expensive kind. Cobalt, of course, everybody expected Congo to blow up and stop producing 65% of world supply. But the Chinese have their mitts into Congo, and so far Congo has continued to operate its cobalt copper mines and supply the world. So there's been no supply disruption of the cobalt. So it's at $15 a pound. But the new trend, besides all these Chinese batteries not requiring nickel or cobalt in their configuration, the race is now on to deliver a solid-state lithium-ion battery, and that would allow using lithium in the anode instead of graphite. It would seriously boost the amount of lithium required. But while ones like configurations such as Toyota's working on still require nickel, they do not require cobalt, because the cobalt was part of the stabilization process when they have a liquid electrolyte, and that thing has always had this problem with dendrites and explosions and things like that. So the future use of cobalt for the future batteries, it's diminishing. So cobalt prices are not going to be high, and battery grade cobalt sulfate may not be what the future is all about, and that pretty much has killed the prospects of Sunrise, at least in the foreseeable future of doing anything. So the stock has sunk down into the 20-30 cents range. We're at 93 million fully diluted. It's got a $20-30 million valuation. They have about 8 million Australian working capital left as of their annual financials, June 30th. Insiders still own 56% of the stock. Friedland is the largest shareholder. They've been acquiring projects elsewhere in Australia, looking for other base metal types of targets. But we've seen this story before with Friedland companies that failed. Think of Kaizen Discovery. They just kind of slowly fade away and disappear. And that's why the stock's got diminishing volume, a sinking price, sort of flatlining like a classic bottom fish. But you have to keep in mind, Syerston is still the richest scandium deposit in the world. So when I was going through their financials and presentation, I saw that Sam Riegel has pivoted back to the scandium Syerston project, and they are now resuming discussions with various potential end users. And it may be that today the end users will be far more receptive. We are heading probably into a military arms buildup cycle as the conflict between global East and global West starts getting hotter. And so there's lots of defense applications that could benefit from aluminum scandium alloy. And what happened in 2021 was also important, because Rio Tinto at Sorel Tracy, where it processes the lacteo iron titanium ore to make iron, and the titanium slag it used to sell to pigment makers, it was about 80% TiO2 in it, and the pigment makers don't want that anymore. So it had to do work to upgrade it to rutile equivalent. And in the process, they realized that all the scandium was reporting to the slag, and they figured out a way to recover it. And that Sorel Tracy operation can scale to a maximum of 50 tons of scandium oxide per year. But because Rio Tinto owns Alcan, which has operations in Quebec, this was a natural to start fiddling with this, doing byproduct, getting it out, and try and build up the supply to a point where the end users will start using aluminum scandium alloy. And that got everybody excited, at least me with Scandium International, but then nothing seemed to happen. And it appears to be the problem is they can't get rid of the iron impurity down to a level which is acceptable for scandium oxide. So that all the hype has stalled. But a couple of years ago, Rio Tinto bought the Owendale deposit from Platina for about 14 million Australian. And this deposit is right next to Syerston. I think it's part of the same complex, and it's got similar high grades. And Rio Tinto is now going through the permitting cycle to try and develop this as a source of standalone, scalable scandium supply. So this has to be absolutely galling to Robert Friedland, who is no friend of Rio Tinto thanks to its history with Turquoise Hill, the original Ivanhoe, which found Oyu Tolgoi. So he has the richest scandium deposit in the world, and he has the water rights for this whole area. And he spent $200 million on what now appears to be a worthless nickel cobalt resource. I think if they can get some traction, this Syerston deposit could become a major future supply of scandium that's scalable. So I gave up on Scandium International because the existing management was ousted by the largest shareholders in 2022. They did a big private placement that's now down to about $700,000 working capital. Their plan was a wait and see, do nothing plan for 5 years, and we're now into year 3 and nothing's happening there. And I'm not sure what's going to happen with that stock. It sits there at 2 cents. But if you want to make a bet on the future for scandium, Sunrise Energy Metals is your best bet with the most upside right now.
Why do you think Vista Gold Corp is the best gold proxy among your 2025 favorites?
I adopted Vista Gold Corp as a favorite last year and continued it this year as a good spec value favorite because in March 2024, it updated its feasibility study for the Mount Todd project in Northern Territory of Australia, and it's fully permitted. In other words, shovel-ready, has the support of the Indigenous people in the area who actually have a stake in it getting into operation. And it's a 50,000 ton per day milling operation, open pit, and it has an after-tax IRR of 20%. And if you use 10% as your discount rate, and an NPV of 562 million US, and at 5% it's 1.2 billion. And this was done at $1,800 gold. And if you take the rational speculation model concept of a project at this stage, not yet in construction, should be priced 50 to 75%, the stock should be in that sort of 450, or if you take 10%, 217 to 325 a share US, or if you're willing to take 5%, 450 to 694, and it sits at 56 cents. Now, where is gold today? It's $2,600 to $2,700. So I've taken their discounted cash flow model and put the current spot price in 2670, and all of a sudden, whereas at 1800 it just barely met the development hurdles. I mean, 19 or 20% was above the 15% minimum required, and the at 5% the NPV of 1.2 billion was a little more than the $1 billion capex. And again, capex always going to be more when it's actually built. And if you use a lower discount rate, which is what the producers would likely do, well, it's not so spiffy. But when you plug in 2670, it changes dramatically. The full upside price that you would see for 5 and 10% at this thing is $17 to $27 a share, and you can knock that back to 50, 75%. It's well above 56 cents. So that makes this a proxy, a leveraged proxy for the price of gold. Now you might think, okay, maybe there's some weird flaw with this thing that make people skeptical about the flow sheet. And yes, the Mount Todd project has a tainted history. It was twice put into production in the 90s and failed twice because the metallurgy wasn't understood, the ore controls were not understood, and then of course a really lousy gold price also didn't help the situation. Vista Gold acquired it in 2006, and this was part of its general campaign of acquiring gold projects from distressed companies, doing some work to upgrade them, and basically holding them as a proxy for a higher gold price. And back in those days, the Doug Caseys of the world, everybody was, talking about $2,000 gold and fiat currency debasement, and gold's going to go way, way up, and blah, 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 blah. And if you own one of these stocks, you will get a leveraged impact because the market's pricing them as like not really being in the money, so you're not paying fair value for these projects if gold were suddenly at $2,000. Well, Fred Ernest, and the predecessor, when they took this on, they realized that this project had warts, and they have focused the last 12 years on really fixing up the flow sheet. They sold off all the other assets so that Mt. Todd is the only asset still in the company. It is a pure proxy on the price of gold. So they believe they have taken care of all these concerns about what happens when you actually put this into production. So why is the stock so cheap? Well, one reason is the scale. The 50,000 tons per day producing 400,000 ounces a year for 16 years. The $1 billion capex, only the big majors are going to do that. But they're not yet interested in 1 gram per deposits below 1 gram per ton gold. They're more interested in swallowing up their smaller rivals, such as Newmont did with Newcrest. That's where their focus is right now. They do not want to buy out these deposits. And there's also this skepticism out there that $2,700 gold, this is a temporary mirage. It's like lithium going to $35 for lithium carbonate in 2022 and then collapsing back below $4. The last bad experience was 2009 to 2011 when gold ramped towards $2,000. The producers started to go down early 2011 while gold was still heading up. Didn't peak just below 2,000 until late 2011, but then by 2013 it had collapsed back to the $1,100 level, and all the assumptions everybody made turned out to be okay. Oh well, now we have all in $1,100 to $1,200 cash cost, and oh great, this is where the price is. So all these things are worthless. So the market's memory is we are going back to that. Bitcoin's going to $1 million a unit, but gold's going back below $2,000. So don't touch these producers, and we saw that last year in the gold producer index. Gold ramped up 26%, and this was better than what my gold producer index did that year. The producers have lagged because the market doesn't believe gold is real anymore, and the reason is that it's actually global East nations and some global South nations who are buying gold as America flexes its muscles, uses the U.S. dollar to try and bully other countries into submission. It isn't American investors or even Europeans buying gold. You can see that in the GLD ETF. It just kind of flatlines in terms of gaining or losing ounces. Gold is no longer a thing. So obviously I've made it a favorite, because if people start believing gold is a thing, such as it going through $3,000, and American policies are really going the wrong way, unexpected way, and everything getting really ugly on the global stage, and gold starts going up because now everybody wants to own gold, and no foreigner wants to buy Bitcoin because that's just a mirage priced in U.S. dollars. But Vista Gold Corp doesn't want to wait for something terrible that nobody really wants to happen to make the stock go up. So late last year, they did a trade-off study and decided we are going to do a feasibility study for a 15,000 ton per day scenario, which will have hopefully a capex of half that $1 billion, less than half the $1 billion needed for the 50,000 ton per day scenario. Why are they doing this? Initially, people said, oh, no, you're going to try and build it yourself. No, we hate juniors that build their own mine. Those are dogs. Nothing ever goes right. No, the reason is that only a handful of majors can make a buyout offer for something like Mt. Todd. But there's a lot of intermediates which they can't justify doing a takeover for a project that's got $1 billion capex because they don't have that. Plus, everybody thinks gold's going back below $2,000. But something smaller, they can acquire. So the goal for Vista Gold is to show how this would work as a 15,000 ton per day open pit milling scenario. And then the more aggressive intermediate producers who can use their paper to acquire something like Vista Gold, they can justify to their shareholders why they are going to acquire this. And if gold does start to inflect on the upside, these intermediate producers will be the ones that move first. So the value of their paper as currency will go up. And from Vista Gold's perspective is, well, we really don't want to be taken out at $1.50 by some cash stink bid from Barrick, and then we have our cash, pay our taxes. We would actually prefer to be taken out when the market is embracing a secular bull market by an intermediate who's going to keep going up. And because this project will have feasibility studies for a medium and large-scale scenario, the intermediate could decide if the bull market becomes strong enough, we'll go with the 50,000 ton per day scenario. So this is a strategic move by Vista Gold to make itself appetizing to a larger pool of potential buyers of the company.
Why did you add VR Resources Ltd to the 25 favorites?
VR Resources has been a favorite in the past, but most of the time it has been a bottom for spec value rated junior. Now, I've talked about it a fair bit in December when they started to get some joy on their Empire District project. Earlier in the year of 2024, their focus was the New Boston copper play in Nevada, and it took forever to drill several deep holes, and then those holes just ended up being anomalous, with the resulting conclusion, okay, the geophysical anomaly isn't quite what we thought it was. It doesn't really explain what we're hitting, so it's probably a mirage. But we think now we understand, based on the vectoring of the mineralization, that where we should be drilling. But the market wasn't going to give them more money to drill some more expensive holes on that. So the company also has these projects in the James Bay lowland area, which are IOCG targets. But the new thing that they embraced in September, after they've been spent almost a year interacting with Brian Holbeck, who's a prospect who actually, heaven forbid, spends his own money to do geophysical surveys and even drill a few holes on the properties that he stakes. They acquired several projects, of which the most important is Silverback and the Empire project, which is also now the Empire District, or the Wedgwood target. It's an ultramafic nickel PGM copper type play. They drilled that in December. They've got assays pending. We don't know if this particular target will end up having the sort of palladium grade similar to Lac des Îles, which is a bit farther to the east. But if the tenor of the grades is better than just sort of background low-level stuff, that changes the perception of this area. This area, with the Empire District in the north and the Silverback in the south, it's an area between the 20 million ounce Hemlo deposit just on the other side of Lake Superior in the Wawa area, and the Hammond Reef 10 million ounce low-grade deposit to the west. This area is like a big, giant donut hole of emptiness with the rocks that the academics call the Marmion tonalite, which is not seen as very prospective for any sort of mineralizing systems. Plus, there's so much overburden in this area that it's been difficult for prospectors to find anything. And VR Resources moved into this area because what they saw Byron Holbeck come up with at Silverback and at Empire told them that there may be more going on than everybody has thought. And in the case of the Empire holes, if they see that this area is fertile for these Lac des Îles style copper platinum group metal systems, they will go out there and stake all these other magnetic anomalies that are potentially something similar. So they will know, others won't, and they'll be able to take this step. But Silverback is the one that's tantalizing. And Byron had drilled one hole at this ultramafic dike, and he got some low-grade 0.15% nickel, which is not very exciting. But on the way to it, they passed through this porphyritic unit, which was anomalous with gold. And Byron had also found some high-grade copper gold showing off to the side of the road, which seems to be sort of remobilized mineralization. And VR did this 3D DCIP survey, which when they finally got the results, it blew their minds, because there was a substantial IP anomaly, which is supposed to represent the presence of sulfides associated with a north-south structural feature that cuts through this east-west portion of this ultramafic dike. And they found some mollyite surface into the south, and they said, wow, this is something big. Nobody had any idea this is here. There's no real outcrop to get excited about. Byron got lucky finding that high-grade stuff off to the side of this big anomaly. Maybe this is a Hemlo scale system, and it's all right by the road too, so that's kind of convenient. Or maybe it's a Hammond Reef type system that nobody recognized because everything's obscured by overburden. So they are now gearing up to drill the Silverback target. Of course, it's high risk. It could end up being nothing. But this is the sort of story that VR Resources, Justin Daly, the CEO, and Michael Gunning, the chairman, they come up with these stories. They do their homework. They raise money. They swing for the fences, drilling 100% owned projects. And of course, they suffered because we're in this endless bear market. They had to end up financing flow-through at a nickel to get the money for this program. But they have a whole inventory of projects. If we ever get into a bull cycle, they can go back to Nevada, where they have the Bonita and the New Boston copper plays with the unfinished business. They have the Big Ten group of epithermal gold plays in the southern part of the Walker Lane that are unfinished business. They have unfinished business in the James Bay lowland area. But for now, the focus is on these two plays, Empire and Silverback, in Western Ontario, in an area that has historically been shunned because it's been stigmatized as not the right Archean rocks to host anything important.
Why did you continue West Vault Mining Inc. as a 2025 favorite?
I first discovered West Vault Mining in 2023 when I crunched the numbers. They had updated a pre-feasibility study earlier in 2023, and it was for the Hasbrook project, which is really three low-grade gold deposits just southwest of Tonopah. They had been found during the 80s exploration waves, and the grades, relatively low, sort of 0.6 to 0.7 gram per ton system, but it's oxidized material, so it is heap leachable. And Peter Palmado's Sun Valley, it's the biggest shareholder. The project was spun out from Allied Gold. A bunch of money was spent. Then it crashed and burned, got rolled back, and then Sun Valley came in and bought a stake. Sun Valley, incidentally, is also, I think, the largest visible shareholder of Vista Gold. And Peter Palmado's not at all interested in seeing a junior develop a gold mine. He sees these things as gold vaults, waiting for the price to be right for a true mining company to take it over and acquire it. Now, why does the numbers for West Vault, they did their PFS at 1790, and there they get a 48% IRR, and they get a NPV of 180 to 190 $1 million for 5% and 10% discount rates, and that translates into sort of a $3 to $5 stock range, which you got to knock back to 50 to 75%, so still sort of $2 to $3. And why is this stock stuck at 90 cents to $1. Well, part of the problem is that it would produce only about 72,000 ounces of gold over an 8-year mine life. Now, it would probably be longer because there remains exploration potential at Hasbrook, which the company doesn't want to spend money on. That's for whoever acquires it. That's sort of the sizzle, the extra that might come from buying this out. Hasbrook is being held for a revival of mining in Nevada. Most of the focus has been in the northern part of Nevada with the Carlin-type deposits, and that's now pretty much dominated by Newmont and Barrick with the joint venture that they formed to rationalize their use of roasters and so on. But there is an epithermal revival coming. We've seen deposits like the Silicon Merlin deposit of Anglo Gold, 13 million ounces, yes, low grade, but at $2,700 gold, it's open pitable, it's worth developing. Companies are such as Silver Range, which we talked about last week, they're in there looking at the high grade potential that's a little bit deeper, more obscure to find than what was pecked at in the past waves of exploration. This region hasn't had much serious exploration in the past couple of decades. It had a lot after gold went to $400 and heap leach became reality in the 1980s. And Hasbrook and sort of Three Hills are kind of leftovers from this period. But there may emerge other additional open pitable oxidized epithermal systems. So there could be a whole string of these eventually discovered, but this is one that's already exists, is permitted, is shovel ready. So the speculation is that somebody, and Centerra is a candidate because it acquired the Goldfield project farther to the south and is working on developing it, to acquire these other deposits that are in this area. And because Westfalt's Hasbrook is the most advanced and is shovel ready, that would be the first one to be taken out. So to me, it's like a canary in the coal mine. When Westfalt starts to go up and gets taken out, that's a signal that this inflection has happened, that the market is starting to believe that gold mining is part of America's future, especially in Nevada. And so I've got it in there as this proxy, not just for gold being taken seriously, but for mining in America to be taken seriously by a new generation of investors.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.